Welcome back to Explain the Charts. Today we're looking at the USDCAD currency pair and how the news and charts are shaping its trajectory. The Canadian dollar, also known as the loonie, has been under pressure in recent days, driven by a combination of factors. A recent positive non-farm payrolls report in the U.S. bolstered the U.S. dollar. Meanwhile, the Canadian economy is expected to enter a recession in the first half of 2024, which has weighed on the loonie. Furthermore, the correlation between the Canadian dollar and crude oil prices remains strong, and oil prices have been under pressure due to OPEC Plus plans to increase production in October, despite demand uncertainties. This confluence of events has led to a weakening Canadian dollar, resulting in a rise in the USDCAD exchange rate. Let's take a closer look at the charts to understand how these news events are translating into price action. If we look at the daily chart, we can see that USDCAD has been on an upward trend in recent weeks. The pair has broken above several resistance levels, including the September high at 1.3848. This break above the September high is a bullish signal, suggesting that the USDCAD could continue to rise. However, the rally may encounter resistance as it approaches the August high at 1.3947. The RSI, a momentum indicator, is currently in overbought territory, indicating that the bullish momentum may be waning. This suggests that a correction or consolidation could be on the horizon. Keep an eye on the 50-day SMA, which is currently sloping downward. If the USDCAD breaks below the 50-day SMA, it could be a bearish signal, suggesting a potential reversal of the upward trend. Let's zoom in on a specific time range on the 1-hour chart to get a more detailed understanding of the price action. The 1-hour chart reveals that USDCAD has been experiencing a series of higher highs and higher lows, confirming the bullish trend. However, we can also see a recent pullback, suggesting a potential short-term consolidation. This consolidation is likely due to profit-taking after the recent rally. Look closely at the recent candles, where the price action suggests a potential double-top pattern. This pattern, if confirmed, could be a bearish signal, suggesting a potential reversal of the upward trend. A break below the neckline of the double-top pattern would be a strong confirmation of this bearish signal. In contrast to the daily chart, the RSI on the 1-hour chart is showing signs of bearish divergence. Bearish divergence occurs when the price is making higher highs, but the RSI is making lower highs. This divergence indicates that bullish momentum is weakening, which could lead to a pullback in price. Let's move to the 15-minute chart to get a more granular view of the short-term price action. The 15-minute chart provides even more detail on the recent price action. We can see a series of short-term swings and fluctuations, demonstrating the high volatility in the market. However, it's difficult to find any clear patterns or trends on this time frame, as the price action is quite choppy. The short-term volatility could be attributed to traders taking positions based on the latest news developments. Let's return to the daily chart to discuss the key price levels to watch and how we can incorporate the information from the other time frames into our trading plan. The daily chart helps us identify important support and resistance levels. The key support level to watch is the 50-day SMA, currently at around 1.3400. If the USDCAD breaks below this level, it would be a strong bearish signal. Conversely, if the USDCAD manages to stay above the 50-day SMA, it would be a bullish signal, suggesting that the upward trend could continue. The next resistance level to watch is the August high at 1.3947. If the USDCAD breaks above this level, it would be a strong bullish signal, suggesting that the upward trend could accelerate. The 1-hour chart's double-top pattern, if confirmed, could lead to a pullback in price towards the support level at the 50-day SMA. However, if the USDCAD breaks above the August high at 1.3947, it would suggest that the bullish momentum is strong and could lead to further gains in the pair. Remember, the market is constantly evolving, and news events can have a significant impact on the price action. Therefore, it's essential to stay up to date on the latest news and economic data releases. We've analyzed the USDCAD charts based on the recent news events and identified key price levels. It's critical to remember that these are just potential scenarios, and the market can be unpredictable. Our analysis suggests that USDCAD could potentially pull back towards the support level at the 50-day SMA, particularly if the double top pattern on the 1-hour chart is confirmed. However, if the USDCAD breaks above the August high at 1.3947, it could signal a continuation of the bullish trend. Keep an eye on the 50-day SMA for support, as a break below this level could be a significant bearish signal. In addition to the key price levels, it's important to consider the overall market sentiment and the impact of upcoming economic data releases. Remember, trading involves risk, and it's essential to develop a sound trading plan based on your individual risk tolerance and investment goals.